Well, good morning, everyone, and good afternoon. It's my pleasure to kick this off. I'm Jennifer Winter. I'm an associate professor at the University of Calgary in the Department of Economics and the School of Public Policy. And it's very much my pleasure to have organized this with Erin and the International Institute for Sustainable Development. And so before we kick things off officially, I would like to take this opportunity to acknowledge the traditional territories of the people of the Treaty 7 region in southern Alberta, where the University of Calgary is situated, which includes the Blackfoot Confederacy, comprising the Siksika, Piikani, and Kainai First Nations, as well as the Tsuut'ina First Nation and the Stoney Nakoda, including the Chiniki, Bearspaw, and Wesley First Nations. The city of Calgary is also home to Métis Nation of Alberta, Region 3. So we have an excellent lineup for this 2-hour session. First, we will have Erin give an overview of a recent IISD report on the future of oil in Alberta's economy. And then we will move to a panel that I will moderate, which our topic is the challenge, oil's future as a driver of Alberta's prosperity. And then we will close with a panel moderated by Marla Orenstein from the Canada West Foundation, and that panel's topic is the possibilities, transitioning to new growth opportunities. So welcome everyone, and now I will turn it over to Erin for his introductory comments.
Thanks, Jennifer. So yes, I'm Erin Cosby. I'm coming to you from the traditional territories of the Ktunaxa and Tsuut'ina Nations. Don't let anybody tell you that Tsuut'ina Nation is extinct. I'm a senior associate with the International Institute for Sustainable Development. I'm delighted to be co-hosting and organizing this with Jennifer and the U of C School of Public Policy. Just for those that don't know of us, the International Institute for Sustainable Development is an independent nonprofit think tank. We work on solutions in 3 broad areas: stable climate, sustainable resource management, and fair economies. Headquartered in Winnipeg with offices in Geneva, Ottawa, and Toronto. Much of our work is international, but one of the things that delights me about working with IISD, which I've done now for 30 years, is our ability to bring the experience of that international work to bear on national policy research, both in Canada and other countries. So a couple of short housekeeping items to take care of before we launch in. First, just a note that the participants in our webinar today are speaking from their personal capacities, not representing their respective institutions. And second, to note that our moderators are going to try to make things as interactive as possible. And they'll do this in part by taking questions from participants. If you have questions or comments, please put them in the Q&A feature as opposed to the chat feature. We'll be monitoring that and relaying your questions to the moderators and participants. So before handing things over to the moderators, I want to say a few words to set the context for our discussions. As Jennifer said, a lot of this will draw on an IISD report that we released last week, In Search of Prosperity, the Role of Oil in the Future of Alberta and Canada. It was produced with the generous support of the Ivy Foundation in Canada. We produced that report, and we're co-hosting this webinar out of a conviction that there's an urgent need for a far less divisive discourse on these kinds of questions than we see typically in political circles and media. And that an approach that starts from a concern for Alberta's future prosperity offers us a viable way forward. So I'm sure most of you are familiar with the IEA report that landed at the end of May, in which they started from a net zero future out to 2050. And one of the scenarios that they modeled to get us there, the scenario that they modeled, involves no new investment in oil and gas. This echoes a number of recent analyses, both at the international level and the domestic level, which start from an environmental imperative and work backward to understand what that implies for the oil sector. Our report starts from a different place. It asks, from a purely economic perspective, how viable is the oil sector as a long-term contributor to Alberta's prosperity? And to answer that question, we surveyed 8 critical driving factors to the future of oil. We modeled low oil prices and volatile oil prices. And the result is a story that has 2 parts. The first part is getting to peak demand, and the second is what the world looks like post-peak. In the story of getting to peak demand, one of the key drivers is global climate action. We've seen national net zero pledges from countries that now cover 68% of the world's GDP and over 60% of GHG emissions. This is not a fad. Increasingly, these targets are being laid out in national law with comprehensive, detailed roadmaps. These governments are responding to pressures that will only increase over time. A second key driver is the electrification of transport. Transport has a big place in this story because it is responsible for road transport, responsible for 44% of global oil demand. And it's related to the first factor because electrification of transport is as such a low-hanging fruit for governments looking for climate action. It's a cost-effective, relatively painless way to drive emissions reductions. It often has this politically appealing industrial policy link. And it already has its own momentum. We're looking at cost parity for EVs by the early 2020s, or this year if you're a Ford F-150 fan, and a superior product. All of this leads us to believe there's going to be very few internal combustion engine sales by 2030. We add to that an increasingly stringent fuel economy standard regime in North America, Europe, China, and of course the eventual decarbonization of other forms of transport, aviation, shipping, commercial freight. On the plus side, in terms of oil demand, there will be increases in demand for plastics and other petrochemicals with oil as a feedstock, driven by population and GDP increases in some key developing countries. But importantly, that increase in demand will not be enough to outweigh the displaced demand from electric vehicle dissemination, the electrification of transport. And these two trend lines lead us to predict that if we haven't already hit peak demand, we are going to likely do so by 2030. Whenever that happens, and we can argue about the date, whenever we enter this period of secular decline in oil demand, everything changes. And this is the second part of the story. One of the key drivers in this part of the story is how our global competitors behave. The world's oil producers have only ever before faced a future of cyclical oil price shocks, always with the prospect of a return to growth. The strains of OPEC Plus in this world will be intense. The discipline will be hard to maintain as oil-dependent states and their national oil companies discount the value of their future resources and have massive incentives to race to sell the last barrel. So we see a future of low oil prices post-peak. We also see volatile prices with the discipline of OPEC Plus eroded. And we modeled how damaging that volatility is for Alberta, and the results are rather stark, much more significant than just low oil prices alone. Investment is impaired, royalties are decimated. In this post-peak world of low and declining prices, we still see continuing production from existing Canadian oil sands mining operations and SAGD, and some expansion of existing SAGD operations. But investment in big greenfield mining operations is not going to materialize. While profits may be maintained, growth is going to suffer, and that's particularly damaging in terms of investment and employment. And this will accelerate an existing trend in the sector toward much less employment overall. New investment in the oil sands is going to be increasingly challenging post-peak. This is going to exacerbate an existing difficulty based on the divestment movement and made no easier by the Supreme Court's decision in the Redwater case. All of this means a future post-peak in which the contributions to the Alberta economy from the oil sector are a shadow of their former selves, whether we count them in terms of employment or investment, GDP contributions, royalties, or provincial or payroll taxes. So our conclusions stemming from that vision of the future. As a chapeau to those conclusions, we see oil still as playing an important part in the Albertan economy. The revenues over the next decade are going to be critical to helping to underwrite the kind of diversification that leads to future prosperity. And of course, the human and natural resources that drove success in the oil sector are going to be needed to power the drive to the alternative growth sectors of the future. But three things. First, oil for combustion, anyway, is not an appropriate target of industrial policy support. Smart industrial policy looks for sectors that have a great future growth potential that can be unlocked by strategic investments and support, and that is not the oil sector. Second, diversification is imperative. Now we're going to hear later in this session, I'm very much looking forward to it, about the prospects for future growth in various new sectors, but it takes much more money than we're spending on it now, and it takes time. The investments in Aostra that gave rise to our massively successful oil sands development took almost 2 decades to come to fruition. And third, the transition needs to be anticipated and managed. We have good examples of successful transition away from resource-dependent economies, transitions that are more friendly to workers and communities, but we have many more examples of unplanned, disruptive, painful transitions. As resource-dependent economies go, Canada and Alberta are very well equipped to deal with this, but that only matters if we recognize the challenge and we try. Okay, so there's 100 pages of report summarized for you in a little over 6 minutes, actually. And with those happy concluding remarks, I'm delighted to pass this over to the sessions proper and to Jennifer, who's moderating our first session.
Thank you very much, Aaron. And I'm very pleased to introduce our next set of panelists, which includes Andrew Leach with the Alberta School of Business at the University of Alberta, Richard Masson at the University of Calgary School of Public Policy and the World Petroleum Council, Canada, Aaron Bennett at Jarislowsky Fraser, and Nina Lothian from the Pemben Institute. And I'm just going to ask Andrew to start off with his opening remarks. What we will do is each panelist will have 2 to 3 minutes to give their opening remarks, and then we will turn to a discussion. So Andrew, please take it away.
Great. Hopefully, thanks, Jen. Thanks, Aaron, and for the opening. Hopefully everyone can someone give me a nod that you can see slides so I can show you a couple of pictures.
Yes, we can see slides.
Okay,
Thank
perfect.
you.
So I just want to say a couple quick things to frame what we're talking about. And I think the first thing I want to say is remember how big the current oil shock environment we're in is. And so I put up here EIA data from on global liquids demand. And what you can see very plainly is that what we thought was going to be a minor blip on the radar continues to be not only a much larger blip, but one that we're consistently underestimating. So the most bearish oil demand forecast that the EIA has released during the pandemic was the one that they just released last month. And so it's not a case where things are recovering faster, it's things are recovering slower than we expected. I'll maybe pick up on one piece that Aaron said in his point where he sort of made a quick leap between demand and prices. And I'd like to also point out to you that the 2015 to 2020 period or early 2020 period, where we know we were in a sustained low oil price world here in Alberta, was actually one where demand was increasing every day for all intents and purposes at a global level. So be careful about equating those two. This doesn't mean prices will be consistently low, but it certainly matters. And here's what I'm talking about our price expectations. These are EIA oil price outlooks along with the Canadian Energy Regulator. And essentially every year, I just put a snapshot of them, we've been downgrading that long run view on prices. And today's forward market or yesterday's forward market close is essentially brushing the bottom of that range of all of those historic oil price outlooks. When we turn to Alberta, I think the big story though is this one, right? When we think about the oil economy, we think about royalties, we think about government revenues, we might think about Ralph bucks, but really what we had in Alberta for a long time was not just an oil production economy, it was an oil sands project construction economy. And that's what we're seeing going away. And we're seeing capital investment levels. You know, the headline today in the Globe and Mail was capital investment expected to increase in Alberta, but it's increasing off a decades long low or decade scale low by just a little bit. So our expectations for oil and gas capital investment, which is what we've basically dined out on for the last couple of decades, have really been pared down. And this was just out this week, so I thought it was worth highlighting. The IEA's Energy Investment Report shows that this isn't, the broad Trudeau-Notley alliance at work in Alberta and crushing us. This is a global phenomenon where we've seen oil and to a lesser degree natural gas investments fall off a cliff. And within that, the types of projects, greenfield projects and large, long-lived capital-intensive projects are the ones that have taken the biggest hit. So things that you describe as being Alberta's story are the ones that have been hit the hardest in terms of global investments. Last thing I'll remind you of quickly and then turn the floor over is that a lot of the problems we've talked about historically haven't gone away. Our emissions are still a big problem and one that's going to be an increasing focus in the province. The tailings ponds are still there. They're still growing. They still need to be reclaimed. And, that's so a lot of the issues we talk about market access, that might be a different story. But a lot of the issues that we've dealt with over the last decades haven't gone away. They've just been taken over by sort of more pressing and urgent issues. But in some ways, in particular for the reclamation, the tailings story, the low oil price and low oil demand world amplifies this challenge for Alberta. So that's a little bit of framing from me, and I will turn it over to the rest of the panel.
Great. Thanks, Andrew. Richard.
Thanks, Jennifer. Andrew, good comments. Share many of your perspectives. I'm going to do a little bit of framing myself. So, Canada's oil sands have been developed despite many enormous technical, economic, and environmental challenges over the past few decades. And in reality, they're not that long in the development cycle. Much of that development's happened over the last 20 years. So production's now over 3 million barrels per day from about 15 large-scale projects. And we know those projects work very well. There's been a very much a concentration of them. And in recent years, there's also been a concentration of these projects in the hands of a few large operators who are predominantly Canadian. So we've seen a Canadianization that we would have been super happy to see 15, 20 years ago. That's really happened lately. The high world oil prices that led to the wave of investment that peaked in 2014 at $34 billion per year in the oil sands has subsided, and the level of investment has been much more subdued, as Andrew pointed out. So we're about $8 billion per year this year, which is primarily sustaining capital, so down about 75%. So there's already been a huge transition in our industry. It's been painful, but we are essentially living with that new reality. Lack of pipeline capacity to secure access to markets from growing bitumen production resulted in huge price differentials and losses in revenues for industry and governments. This in turn led to government-imposed production curtailment and a number of government initiatives to try and improve market access, including Sturgeon Refinery, the crude by rail contracts, an investment in Keystone XL by Alberta, and the investment in TMX by the federal government. All these things are important and probably merit some discussion as we go through this panel. Oil sands production has quickly snapped back from pre-COVID, from the low COVID levels, and further growth is likely in the near term as some projects that never reached full capacity before COVID struck ramp up to full production levels. We also know that there remains an opportunity for medium-term investment production growth to meet the global oil demand, because investment has been constrained around the world, as Andrew pointed out. A lot of the more complex projects, offshore, deep projects, those type of things were put out of business by shale and short cycle things. And so oil sands, because we know these projects are readily expandable, sit in a relatively unique position. So Canada's oil sands industry and our governments need to continue to innovate to reduce costs, reduce greenhouse gas intensity, and remain leaders in ESG metrics to get the most value from this world-class resource for Canadians while achieving our aspirations, including reaching net zero by 2050. I've been involved in the development of the oil sands for about 30 years in many different roles for both government and industry. I currently work with Fractal Systems, which has developed an economically attractive partial upgrading technology, which makes the existing pipeline system about 20% more efficient, while reducing wells to tank greenhouse gases by about 11%. It's a great example of the type of technology and innovation we need to meet the challenges in front of us. I'm also chair of the Canadian Association of the World Petroleum Council. We'll be hosting the World Petroleum Congress in 2023 in Calgary, one of the largest events in the world, where we plan to have a huge focus on reaching net zero by 2050. And I note that already about 70% of oil sands production is by companies who have committed to net zero by 2050 targets. So I look forward to our discussion of the future of Canada's oil sands and how we can get the most out of the resource for the benefit of Canadians. I'll turn it back to Jen.
Thanks, Richard. Aaron, over to you.
Sure, thanks very much, and enjoyed hearing the comments of the other panelists. I think it offers some really important insights into the future of Alberta. I'm here from the investment side of the business, and just to provide a bit of context for my role and where I'm coming from is, I'm the managing director of sustainable investment strategy and research at a global investment manager, but one that started in Canada and continues to have a large asset base in Canada in public equities and fixed income. So my job is to provide data and analysis and tools to our investment team to really integrate ESG issues, including climate change and some of the things that we've already spoken about and likely we'll speak about more, into their own investment practice. And the reason we do this is to find ways to better manage long-term risk and capture long-term returns for clients. And I think we do need to think long-term, although, when we're talking about some of these things like peak demand in 2030 or perhaps a bit sooner, it may not seem particularly long-term in economic terms. It's certainly long-term in political terms. And the average investment horizon, not ours, but the average investment horizon, that is very long-term. And in some cases perceived as being outside that horizon. So that's always led the investment side of this equation to think, well, this will happen later and I'll have time to adjust, and there's liquidity and things like that I can take advantage of. But in my other role, which is as global energy analyst and involved with forecasting commodities and looking specifically at energy investments of all kinds, including oil and gas over the last decade or more, that does not appear to be true. We've seen lots of cyclical bouncing around of the energy sector, but I think we're also seeing a secular or structural change. I mean, we're seeing a growing interest in global products from our clients, but we still manage a lot of Canadians. So we spend a lot of time focusing on Canada. So what's the current investment sentiment or indicators of investment sentiment for energy and by proxy Alberta? Well, WTI is up 37% or so. Natural gas is up 18% year to date. So that's pretty good. That's back to 2018 levels or slightly above. But energy stocks are still at their 2016 lows. They've outperformed the index by 30%, which is great, but they're still at the lows. So this is telling you something. On a price to earnings basis, Canadian energy is trading at a 22% discount to US energy names. It's trading at a discount to the market as a whole, the TSX, but a 35% discount to the S&P. So those are big deals, and they're telling you something there. Another important point is that energy producers within Canada, at one point, these were 20, 25, 30% of the index. And as an investor, we're always conscious of the index and thinking about, okay, well, if someone just wants to buy the index through a passive product versus give us the money and have us actively make some choices on a sector basis or a company basis, the benchmark is going to be a big determinant of that, or something that we think about. So we're always thinking about that. When you think about energy producers, they've gone from 25, 30% down to 5% of the index. So the role that plays in our thinking about investing in Canada and allocating resources is decreasing over time. This is in fact the lowest that we've seen in 40 years. So something is very different. We've also seen fundamentally, continued constraints on the adding of any kind of export infrastructure, which I think the other panelists have done a good job talking about. But on my side, we've also seen global and domestic investors with relatively small stakes in big companies, both in the US and Canada, go as far as being able to displace directors on boards, and they're winning record support for climate change related disclosure and action proposals on proxies. We haven't seen a lot of this in Canada, mostly in the US, and this is partially because of the environment there with regards to shareholder relations between companies, but it's coming, and I think that's something that needs to be addressed as well. From a client demand perspective, one of our fastest growing products is a product that has a fossil fuel free exclusionary framework, but also has an actively managed carbon footprint on a current and also a future-looking basis. That is our fastest growing product in active management for our firm as a whole. And we don't sell this as a better solution from a risk and return perspective. We sell it as something that is similar, but we believe it is something that appeals to clients that have a values-based exclusion mindset for some of these things. And that's important to note. It's very small relative to our asset base, less than 1% at this stage, but it is growing very quickly and one that we talk a lot about. So all of this sounds very doom and gloom. What does this mean? Is it negative for Alberta? I don't think it's negative for Alberta. I think it does tell you that investors no longer believe that history is a good guide for the valuation and assessment of these industries or the regions that they operate in. Cyclical normalization is no longer the base case. But I also think from an investor perspective, you're seeing a growing level of engagement and stewardship obligations from asset owners and managers really express a clear desire to work with industry and work with governments to figure out how this transition can be orderly and timely without being or not being as disruptive to society, the economy, and by extension, the financial market. So I think that's a positive. From Alberta in general, I see a lot of opportunities for existing production to be an economic and responsible source of oil. I see reallocation opportunities of existing resources to key transition areas like carbon capture and underground storage and hydrogen, where Alberta is uniquely positioned for this. And I see opportunities from a solutions perspective, where you have a culture and a population that has a lot of engineering and innovation capacity and a lot of experience with widespread energy infrastructure. So not all bad, but certainly some areas for concern.
Great, thank you, Aaron. And Nina, your thoughts?
Thanks, folks. Thanks for the conversation and the really interesting comments so far. I just wanted to introduce myself and actually acknowledge my face. I crashed mountain biking last week and it's still healing, so that explains the odd coloring in my cheeks. I'm also the director of the Responsible Fossil Fuels program at the Pemben Institute. And I just wanted to say a couple words about our institute for those that aren't familiar with us. So we're a nonprofit organization. We were established in Drayton Valley, Alberta, over 35 years ago. And a group of local citizens came together in response to the worst sour gas explosion in Canadian history, the Lodgepole blowout. And that group of citizens worked with government and industry to make the case for improved regulations. And that same approach is what drives the organization today. So we work with governments, industry, Indigenous, local communities, regulatory bodies, academics, and others to evaluate and advocate for better public and private policies to improve environmental performance across all aspects of energy production and development in Alberta. So we're an Alberta-based organization with offices in Edmonton and Calgary, but we also have offices across Canada. So I had a couple comments about the challenges for Alberta's oil and our gas sector. And I know we've already talked a lot about the International Energy Agency's landmark report that came out a couple weeks ago. But I just want to re-emphasize that the IEA, they're not saying anything particularly new. There's lots of respectable organizations that have been developing scenarios for limiting global warming to 1.5 degrees. Groups like BP, Shell, McKinsey. And they're all saying essentially the same thing, that if the world is going to act on climate change, the future for fossil fuels will be and has to be different from the past. I think, like Aaron said, we're not in another boom bust cycle. There is a massive shift underway for the future of fossil fuels. Just in specific numbers, the IEA says a net zero scenario addressing climate change means global gas demand declines by 55% and oil declines by 75%. So Alberta has a challenge. We have a higher cost, a higher carbon intensity oil than the global or even the North American average. I agree, there are a lot of differences across the sector, and we do have low cost, low carbon intensity operators. And those will be well positioned to survive in a declining demand for oil in the short and medium term. But many of our operations are simply not low cost or low carbon, and the technologies available for decarbonizing make sense for new builds, but are expensive for retrofitting our existing operations. And as you all know, the IEA was pretty clear that new developments in oil and gas are essentially off the table if we're going to actually address global warming and keep it to below 1.5 degrees. I think the runway for natural gas is longer than oil, and Alberta has made some strides in decarbonizing upstream natural gas production, but significantly more needs to be done. In order for new cleaner energies like hydrogen derived from natural gas to make sense, the full life cycle emissions need to decrease. And so there's opportunities for our natural gas sector to capitalize on those demand opportunities in the short term by producing the lowest carbon intensity natural gas alongside performance on the other environmental, social, and governance metrics. So we have the challenge of competing in a shrinking global market for oil and gas, where carbon intensity and cost will be the markers of success. But to add to that, and Andrew mentioned this already, we have a significant liability problem that we also need to address. Alberta had 97,000 inactive wells at the end of 2020 and almost 8,000 orphan sites. And we also have over 1.3 trillion liters of tailings sitting in tailings pods in the Fort McMurray area. So we're in a very challenging position, and the way forward is not the same as the past. I'm optimistic that we can come out on the other side of this with a vibrant economy, but we require strong climate policy, a real focus on our liabilities, and an acceptance of the risks facing our fossil fuel sector.
Great, thanks, Nina. Reminder to all attendees, please use the Q&A function to submit your questions and we'll integrate them into the discussion. So I think to start with, I'd like to, oh, Andrew, did you want to comment? Okay, so I'd like to dig in a little bit more into the 2050 net zero targets. So Government of Canada has set a 2050 net zero target. There are several large players in the oil and gas sector, as Richard mentioned, that have set net zero targets. So I think first, Aaron, I'd like you to comment on how investors respond to net zero, the signaling by both firms and governments. And then I think maybe I'll pass it over to Andrew to talk about sort of the policy uncertainty as we think about potential political change within Canada and how that could affect decision making.
Sure. So with regards to net zero targets, they certainly have become de rigueur in the larger integrated companies globally, and I think expectations for global investors are that having some sort of commitment, if you are a global oil and gas company, or indeed even a domestic oil and gas company, is that you have this commitment in place. But I think that I think that one of the issues is now that we're seeing more of them, there are more questions around, okay, give me the details about how you're going to get there. And I think, although the IEA scenario is interesting and comprehensive, I think we need to acknowledge that represents one path, and I think they do that as well. It is not the only path, and certainly not the only path for every region, or perhaps even the base case from every region's perspective. And I think that investors are getting comfortable with that idea that there needs to be some allowance for a dynamic approach to achieving net zero. But there is an expectation that you have this, and there is beginning to be an assessment of what is a good net zero commitment and what isn't. And some of the keys to what is a good one and what isn't are some short, medium, and long-term targets. That also provides some insights into how you're going to do what investors want companies to do, which is allocate capital in a way that's going to be accretive over the longer term, without giving away too much about their strategy and everything else. I think there's also a view around how are you going to use things like negative emissions and offsets, as well as with with obviously a preference for lower levels of negative emissions and offsets, as well as a a view around scope 3, which is really the hardest nut to crack in this area. And in thinking about scope 3, I mean, you're effectively asking a company, how are you going to decrease demand for what is currently your primary product? And that's a challenging one, and I think some companies are taking that on. Some companies have suggested they'll take it on, but there's very few details on that. So I think that's one of the big gaps right now. And what are we waiting for on this one? And I think companies and investors will both acknowledge is there needs to be some level of policy support and policy certainty around basic things like a carbon price or a carbon tax, and that needs to be something that's applied. We're seeing some of that as it cycles through. The government's making these commitments, but I think investors are holding governments to the same standards that they're holding companies at in terms of assessing these net zeros. So I think it's an important step, an essential step, but it's not a box that you can tick and move on. This needs to be part of your strategy from here on out in terms of how are you going to play a role in transition? How are you going to allocate capital to provide long-term risk-adjusted returns to your investors? And those are really the focuses.
So I'll add a little bit to that. I think the scope 3 is obviously the big challenge, but on an individual company level, because a lot of it lies sort of beyond their control or beyond their reporting horizons and these sorts of things. But I think what's the bigger challenge, and it's something we struggled with in a lot of other files, is making your goals consistent with everybody else's goals, in the sense that, if all of the net zero goals are accomplished, is your strategy to reach net zero still sort of internally and externally consistent? So if all countries act on climate change in a way that's consistent with their existing targets, with existing agreements, et cetera, is a given company's strategy where they think they can reach net zero still viable? Or is their strategy implicitly sort of, we can do this assuming that the world doesn't act hyper aggressively elsewhere? What am I talking about? Think, if you look at the net zero report from the IEA that was out a week and a half ago, you're looking at, according to their analysis, somewhere in the world of $25 real global oil prices. So in that environment, do large investments in long-lived abatement like carbon capture and storage make sense? Does it make sense to throw dollars per barrel after abatement solutions to produce oil that people aren't willing to pay for? And in that environment, is your actual net zero goal consistent with what the global oil market looks like if the world is driving towards net zero? So maybe I'm not making that 100% clear, but I think the analog here, we saw this with pipelines, where there was a lot of argument about greenhouse gas emissions from pipelines holding the rest of everything else constant, but there was no discussion of what does the demand for pipelines look like in a world acting on climate change. And that was sort of exempted from the process. And I think part of that is where we're getting to now, where bringing those individual sort of project level calculations into what an economist would call sort of a more general equilibrium is a little bit more challenging.
Thanks, Andrew. Nina, you want to jump in?
Yeah, I just wanted to talk a little bit more about like the net zero commitments, and I think overall it's really positive that industry is stepping up and making net zero commitments. But I just wanted to argue that not all net zero commitments are equal. Suncor came out with a commitment last week, which is actually quite different and actually a step in the right direction, in the sense that they changed their 2030 target from a emissions intensity reduction, which we've seen historically hasn't actually equated to a reduction in emissions for Alberta's oil and gas sector, to an absolute emission reduction target. So they're saying instead of a 30% reduction on a per barrel basis, they are going to reduce their overall emissions by 10 megatons by 2030, which reflects around 35% of their overall emissions, around Scope 1 and Scope 2. So these are the emissions associated with their facility and the energy that they're using to extract the oil. And that's really important because we actually need to be seeing emissions reductions in line with Canada's targets. But beyond 2030, we also need more detail. And I think Aaron spoke to this, is just a 2050 net zero commitment is insufficient because we can't afford to wait until 2049 and have a drastic decline in emissions. We need to see emissions gradually declining in an organized, planned fashion between now and 2050. So we need much more details from industry around interim targets between now and 2050, and then as much as they can share the plans to get there, recognizing we don't have all the answers today.
Richard, would you like to add your
just
thoughts?
A couple of comments. I mean, obviously, how much you can reduce depends where you start, and Suncor traditionally burned coke as its fuel source, so changing that out makes a big difference. Others like CNRL already have a great amount of carbon capture and utilization or storage. So, you know, you got to really dig into these things to see how each company compares and what they're going after. And I guess the other thing I'd say about targets is, you know, the federal plan doesn't even call for targets until 2030 is the first real target, and we haven't heard what that is yet. So the level of uncertainty that remains for industry is great, and that doesn't help making investment decisions. I've been involved in making those investment decisions a number of times. So, you know, the more certainty, the better. And maybe my final point is I think Canada at this moment has one of the more robust set of policies with regard to greenhouse gases compared to any significant oil producer in the world. And so, you know, on ESG metrics, like the Bank of Montreal report highlighted, certainly we come out on top. And there's lots of progress we can still make with the technology, you know, applying to this large resource where you can have the ability to focus it and concentrate it.
Okay, let's, I guess, like pivot a little bit to talk about the transition to net zero and the vast amounts of technology investments and changes in energy systems, which we've sort of touched on already. And I guess who would like to start by commenting on, say, the role of government? I mean, we already have a really strong signal with an escalating emissions price to 170 a ton in 2030, but that is potentially not sufficient to get us there. So how do we think of the role of the investment community, industry, governments in pushing us further along that path and changing our energy systems? And really, what happens to oil and gas on that transition path?
Maybe I'll
Richard, do you want to start?
A couple of comments. So the way our industry is structured is, you know, we have a vast resource in the oil sands in Alberta. The US has many complex refineries that want to process that, both in the Gulf Coast and in California. And so that's a very strong fit, right? Even the Chicago market is dependent upon bitumen coming from the oil sands. They can survive without it. So we have a very integrated market with a lot of capital in place. What we need to do is to make sure that we're the most efficient producers we can be in terms of greenhouse gases. And so CCUS, which is, you know, very viable given we have the knowledge of our basin to store it or to use it for enhanced oil recovery, is very likely to be one of the solid answers that helps us, you know, adapt to the world. And, you know, yes, production will probably decline globally over time, although I still see lots of forecasts that don't see that happening anytime soon and remaining at a pretty high level till 2050. But the key point is, if we're going to produce the oil, we've got to decarbonize the process of producing it. And I think Alberta is well positioned to do that. And it's going to be very difficult for the US market to move away from our supply, given that we know we can produce it and it's already pretty integrated.
All right, thanks. Nina, please jump in.
Yeah, I think in terms of supporting this transition, we need strong policy. So the carbon price is helpful. I think to Richard's point that the Canadian government has said we need to reduce our absolute emissions by 40 to 45% by 2030. We need more carbon policies as well to help industry and investors know where we're headed, and in order to make investment decisions. But we also need massive capital. And I think I think it's been mentioned earlier, we don't know the paths. We don't know exactly how we're going to get to net zero. And so massive investments need to be made. Carbon capture and utilization and storage is an opportunity for Alberta. We have a lead in terms of experience in that regard. But there's also a lot of other opportunities. And so I think there's a role for the federal government to fund and de-risk some of these technologies. And there's a massive role for the private sector to come in and support this investment. And so if there's a role for government to help kind of open the door and create the opportunity, lowering the cost of these technologies, but also the policy environment that provides direction that they're needed. And we need capital markets to show up as well to help us.
Thanks, Nina. Aaron, let me add a little bit of an additional question before you comment. We've seen some Canadianization of the oil and gas sector over the past couple of years. And so when we think about the transition and the investments necessary to support that, does Canadianization of oil and gas matter in terms of access to the capital necessary to make those investments in emissions reductions?
I think it's an excellent question, because historically, although domestic investment in the domestic names has and remains still quite high, increasingly, even from a retail investor or an individual perspective, investing is a global business, and your ability to allocate your own capital to any number of relatively low cost options, either actively or passively managed, that are global, or even sort of far-flung regions in the emerging markets as well, is much easier than it has been in the past. And so that does make the competition higher for capital on the equity side of the equation, but also on the on the fixed income side of the equation. I think some of the interesting angles that are yet to be tapped in the Canadian market, that I think if they develop, they can be tapped, are this growing interest in labeled bonds where they have specific use of proceeds. Green bonds are the relevant example here, and that's where the use of proceeds are explicitly ring fenced for projects that are so-called green, and there's a variety of definitions there. Now, transition can be a part of that, but sometimes it's difficult because there's different views of what a transition has to look like and things of that nature. So an accepted and defined taxonomy that allows you to say, this is a green bond, this is a transition bond, this is a other bond, would be extremely helpful, because I think we're seeing a ton of capital being mobilized and a growth in interest on these labeled bonds internationally. And I think that the idea that you can invest in one of those in a Canadian company draws international capital, because ultimately these stocks, these bonds are going to trade based on the marginal buyer, and historically the marginal buyer has been from outside of Canada. And so I think we have to acknowledge that certainly the valuation, if not the interest in these things, is going to be significantly influenced by outside buyers. The role of government, what can they do there? I think there are opportunities, both on the infrastructure side and the technology side, to really provide some sort of fiscal or policy support or catalyst for key areas like hydrogen, like grid stability and grid investment. And I think they can do that through the green bond market as well, because they can issue green bonds. And I think if we have a compelling taxonomy for transition, and there is one being worked on by a variety of different groups for transition, I think that can also help attract capital into these environments as well, through the government or through the individual companies themselves. And I think all of that can provide access to capital, which is something that many of these companies right now in the Alberta oil patch are challenged at. And they have to be largely self-funding, but also an incentive, because increasingly we're seeing these bonds price at a premium to their so-called non-green compatriots. And so that's something that says, hey, you can actually tap a lower cost of capital source of capital by making a transition. And ultimately, capital is going to flow where where the lowest cost of capital or the best risk-adjusted returns are available. And I think that those are all things that require policy certainty and stability, and at least in some areas where you do have some significant risk associated with that policy stability and uncertainty, support by the government to say we're aligned with this as part of our plan.
Thanks, Aaron. Andrew, I'd like to bring you in. There's a couple questions that I think are relevant here. One is competitiveness of Canadian oil and gas in right now and in the transition, and I'm hoping you can comment on that. And then secondly, when we think about these massive capital investments in emissions reductions, how do they receive a positive return on their investment?
Two really good questions. I think there's a mix here on the competitiveness story. So when we talk about Canadian oil sands, people tend to focus on those supply costs, what oil price would I need, adjusted for inflation through time in order to make a new investment in a greenfield project make sense. And we hear, the oil sands need $50, $60, $70, $80 a barrel to be viable. But that's really about new project investment. The existing projects are, relatively low cost flowing barrels. And those are going to be competitive under, we didn't see really anybody of major consequence come offline except for little blips right in the middle of COVID. Same thing in the global financial crisis. So the existing facilities, relatively low cost, pretty robust. The question becomes, not just year-to-year sustaining capital, but the major investments in either brownfield expansions of existing projects, so new phases, new mine phases, new expansion projects, or that sort of greenfield story. And that's where we've seen investment basically go away since 2015. And that's mostly an oil price story. Our premier's opinions on this notwithstanding, carbon pricing is pennies on the dollar, whereas things like global oil prices, and particularly the long cycle times are those are where the big dollars are in terms of the changes that we've seen. And the last one I think I'll highlight that people tend to ignore a lot is, if you're making a bet on an oil sands project, you're not going to see $1 back from that for probably 5 years in terms of dollar from sale of oil. You're making a bet on oil 5 years from now to 35 years from now. Take the same dollars and put them into a US LTO or even an Alberta light tight oil play. You're looking at an investment that can recover a lot of your initial capital within the horizon that you can easily hedge through financial markets. So very, very different investment, very different level of long-term commitment to something like oil sands versus not. The second thing to answer your question, I think one of them is the bet on the carbon price, and you highlighted earlier on, right? Am I willing as a company to bet, and put it into individuals? Would I put my retirement savings in a bet on the Canadian carbon price in 2030? No, I probably wouldn't right now, because despite the fact that the government is committed to it today, there are lots of other regulatory vehicles that could be brought in either by a subsequent Liberal government or by an Aaron O'Toole government or an NDP Green coalition or whatever you want to think about. And so if I'm in an oil company's shareholder position, do I want my my company making implicitly that bet, a project that flows cash as a function of the future carbon price, they need some way to lock that in. So we saw some changes with the upfront tax value for carbon capture and storage in the recent budget. I'd like to see that more broader base. We've talked about this in a few other contexts where there would be a way for, as we've seen governments do with renewable power offtake, for example, would there be a way for companies to lock in, even if at a discount, the future value of those emissions, offsets, reductions, certified, whatever you want to call them, through some sort of government program. I'd love to see that just backstops the policy certainty.
Right. And so that's the way we get the signal to investors to make those large capital investments to reduce emissions pretty aggressively.
Yeah, and I mean, Aaron's in my chat window saying contracts for difference, which we did with renewable power in Alberta. That's one model. There are different other offtake models you could use. But yeah, I think that's how you get private capital engaged. And this is we talked about Canadianization. One of the things we're prone to in Canada is imagining that governments can make water run uphill, that we can come up with a new industrial policy and all of a sudden you'll have tens of billions of dollars flowing into a space. And governments can do bits of things on the edges, but what's really going to bring the flood in is international capital that sees a rate of return, a healthy and relatively certain rate of return on investment. And, think of the oil sands boom, right? Tens of billions of dollars a year lined up at the gates begging to get into Alberta. The government didn't make that happen. The global commodity market made that happen. And there was no government program that could have done that scale of investment or created in itself that scale of investment. So you need government actions that enable that investment rather than thinking of the government driving the bus.
Okay, we're almost out of time, but there's a question about Scope 3 emissions. And, we focused on upstream oil and gas for most of our discussion, but downstream is also a bit of, say, an elephant in the room when talking about emissions reductions. Oh, Nina, please go ahead.
Yeah, no, we can't lose sight of that. So that's the 70 to 80% of the emissions associated with your barrel of oil, mostly through combustion as gasoline in your car, for example. And so I think Aaron of IISD talked about this, the move to electric vehicles. Like there's massive shifts in demand for these products. And so that's a responsibility of consumers, of governments, of action, of the global action around climate change, and industry has some responsibility for that as well. I think some of the leading oil and gas companies are actually including Scope 3 emissions in their net zero targets in a way. And so I think there's a huge potential for that demand to change, and there's some potential for non-combustion uses of fossil fuels. But as I said, and we've repeated, it's going to be very small relative today. So we can't lose sight of the demand side, but that's collective action that needs to address it as well.
Okay, I think in the couple minutes that we have left, I'd like to do just a round robin so that each of you can give, say, your key takeaway from the discussion so that the audience can think about in terms of what is the future of oil and gas in Alberta's future prosperity. Nina, do you want to start off? We'll go in reverse order from our opening comments.
Sure. I just think Alberta has a massive challenge. And so consideration needs to be made about decarbonizing our oil and gas sector to remain competitive for the sort of the runway that's left for fossil fuels. But equally, perhaps more importantly, is thinking about a future economy that isn't as reliant on our fossil fuel sector. We can find ways to produce these fossil fuels that don't combust, and we've addressed the upstream emissions, that's opportunities. But there's chat about geothermal, there's chat about hydrogen, there's chat about all sorts of other potentials for Alberta. So I think we need to accept that we have this challenge and start seriously planning.
Great, thanks, Nina. Aaron.
Yeah, I think I think there are opportunities here if Alberta is able to position itself as a responsible and economic source of oil and gas. Although that can't be the only story here, and there has to be the low carbon solutions part of this, whether it's renewable or hydrogen or other things. That needs to be part of the solution if you're really going to think about growth and prosperity. You know, Alberta has a number of advantages. It has the people, it does have resource, and it also has experience, which I think is often underestimated in key enabling technologies for this transition, or ones that are at least adjacent to that. And then, you know, finally, I want to say, and I think this is reflected in some of the questions in the panel as well, is just to, I guess, detach this a bit from the discussion around just pure financial and investment, and to relate it back, is this idea of a just transition gets bandied about quite a bit as well. And I think it's an important one because people matter. It certainly matters because we're all people, but also from a systemic risk perspective, is it's very difficult that if you don't have a just transition, and you have disruptions, it's very difficult for investors to do their job, for folks to you know, get the kind of inputs and outputs they need from the economy, and to invest in the economy, and to invest in markets. And so that you know, that detachment or perceived detachment between Bay Street and Main Street needs to be eliminated as well. And we do need to take this opportunity as we're investing in new areas, keeping finance and returns and things like that in mind, that we need to think about the history of these transitions and what's worked and what hasn't, and how can we address some of the existing inequalities as well. Because ultimately, a more diverse economy is going to be a more resilient economy, and more likely to grow over time. And that's good for people, certainly, but also good for investors as well.
Excellent point, Aaron. Richard.
Just briefly, you know, I think everything I've read indicates this is going to be a huge challenge, and I think the transition is going to be difficult. Alberta is well positioned to continue to produce responsible oil for decades to come, because the alternatives in the rest of the world are also going to be very challenging. We have the technical skills to do it. And, you know, I just think that we need to be realistic about this. One of the things is that we probably won't grow at the very high pace we did before. That crowded out a lot of the rest of the economy. So we can have a solid industry base that does deliver a good greenhouse gas performance, and we can see an economy go in many other directions as well. So I think there's a lot of opportunity here.
Thank you, Richard. Andrew.
I think, you know, I think we need to be honest with ourselves about a couple things. And so I think we need to, when we're talking about, I've often used the term security blankets, right? What's the security blanket we're wrapping ourselves in? So often when we say, you know, the world's going to keep using oil, or look at all the oil that goes into making your iPhone, what we're really saying is things can get back to what they were before. And we're not often being honest with ourselves. We're using one statement over here to mean something, or to hint at something that it maybe doesn't imply. So I think we need that rush of honesty. And I think that applies also on the questions of just transition. And while I agree completely with Aaron's comment that this is important and often overlooked, I think sometimes it's overlooked in a way where we sort of nod to it and say, yeah, we can deal with this, where, you know, there is a way that there's some magic program that can come in and completely buffer a population against the removal of a core industry, or the fundamental change in a core industry. And, you know, my family is all from northeastern New Brunswick, right? We lost the mills in northeastern New Brunswick 25 years ago. And, you know, we got the Phoenix Pay System, we got the firearms registry, we've got, you know, all these government programs, but you've never fundamentally seen something that replaced what was there, you know, when I was a kid, so to speak. And I think we do need that level of honesty, that it's going to involve displacement. It's going to involve families that are facing a choice between staying here in less than advantageous circumstances, or abandoning their families and their homelands and moving. And none of those things are, you know, snap of a finger, 2 words, and everything will be fine. So honesty is my takeaway.
Thanks, Andrew. And that is a great transition to our next panel, which is going to talk about the opportunities for the transition. So thank you to my panel, and thank you to the excellent questions from the audience. I'm sorry we weren't able to get to all of them. And now I will turn it over to Marla.
Fantastic. Thank you so much, Jennifer. I'm just going to start talking and hope that the technology takes care of itself. My name is Marla Orenstein. I am the director of the Natural Resources Center at the Canada West Foundation. We are an independent, nonpartisan public policy think tank. And I wear a couple of other hats as well. I'm a fellow with the Energy Futures Lab, and I'm also currently president of the International Association for Impact Assessment. So all these everything that's been talked about so far is really interesting to me, but I'm also super interested to hear, as we transition to talking about new growth opportunities, what comes up there. Very quick, we're not going to do opening statements per se, but I am going to have our four panelists briefly introduce themselves just by giving their name and organization and what role they play, so we can find out who they are, and then we'll jump right in. So Alison, you're up first. Who are you, Alison?
Yes, thank you, Marla. I'm Alison Cretney. I'm joining today from Treaty 8 territory of the Deneza, Dene, and Cree, and I am Managing Director of the Energy Futures Lab. It's a coalition of innovators and organizations from all different backgrounds working together to advance solutions to create the energy system needed for the future.
Fantastic, thank you. John, you're up.
Yes, I'm John Zhao. I'm the Vice President of Clean Resources at Alberta Innovates. My portfolio include energy, everything related to oil and gas, but also clean tech, among other things. Thank you.
Thank you. Rachel.
Rachel Sampson. I'm the Research Director for Clean Growth at the Canadian Institute for Climate Choices.
Thanks. Last but definitely not least, Angela.
Thanks. I'm coming to you from unceded Algonquin and Anishinaabe territory here in our nation's capital. And I am a policy fellow with the Broadbent Institute, and I've worked as a labor economist for the past 10 years.
Fantastic. And I'm going to remind everyone that if you have questions as we go along, please put them in the Q&A box, not the chat box. Great. So John, this first question is for you. Transitioning to new growth opportunities sounds good, but what do you actually think are the biggest opportunities for Alberta?
Yeah, thank you, Marla. So I think we heard a few comments already when people talking about the transition to new growth opportunities. Many would talk about hydrogen with CCUS, geothermal, lithium, etc. Right? From our perspective, hydrogen certainly is something, has a significant potential. And I'm sure my fellow panelists will probably talk about a bit more on that. But from my perspective, I want to highlight bitumen beyond combustion, or BBC. So in BBC, we are using part of the bitumen. I want to emphasize we're using part of the bitumen, not all of it, for value-added materials instead of for transportation fuel, right? So examples will include carbon fiber, activated carbon, and ash for the binder. So our research indicate BBC has a potential to more than double the oil sand economy without actually increasing the bitumen production. So we heard on the first panel talk about the challenge for the scope 3 emission reduction. Very few actually options is actually available to do that, and certainly BBC is one of them. So this is certainly from our perspective the biggest opportunity.
That's great. Thank you very much. And Alison, I've got this next question for you. The things that John raised, hydrogen, CCUS, bitumen beyond combustion, geothermal, et cetera, again, these are opportunities that I think most people on this webinar will have heard talked about in some way before, but how real is this opportunity? I was on a podcast yesterday and there was a person expressing frustration, and she said that many people feel like they're, you have to pardon my language, host on this one, but they're being served a big rosy glass of bullshit. And So the question is, how real is it, and how likely is this to actually manifest and turn into something that's real? Or is this all just rainbows and unicorns and big rosy glasses in front of us?
Great question. I think that's a really important question, Marla. That might be the most important question because, and it's a fair critique. I mean, and I think it speaks a lot to the point in time that we are in. And I think we have to step back a little bit and recognize that transitions are highly uncomfortable. They involve change on all sorts of different levels. And so change can be very scary for a lot of people, and it can be frustratingly slow as well. But the reality is, I think each of those areas that have been mentioned already and that John's touched on very briefly are real. They're real in that we have the technology. And I think what makes them really real opportunities for Alberta is they truly build from strengths. They build from what we're already really good at. They build from resources that we have. They build from skills and assets. They build from our human resources as well, which isn't to say that it's simple or straightforward either, of course. But the other thing that I find encouraging about the situation we're at is we are seeing movement. One thing that I think is highly undervalued, especially outside the province, is the vibrant innovation ecosystem that exists in Alberta, connected to the energy sector, but extending beyond that. We're seeing a lot of leadership at the community level. I think Edmonton's energy transition strategy is just one example there. The corporate commitments around net zero have been mentioned already. And I think, alongside that, we're seeing some very significant shifts across the sector around openness to diversification. And then similarly, we're seeing strong signals at the provincial government level with diversification strategies now including geothermal, hydrogen, and battery metals as well, which is another I'd add to the list that maybe hasn't been mentioned yet, which, lithium and vanadium and others, which, certainly when we look at the transition that's happening and onset of electric vehicles and things, Alberta is actually really well positioned to be a provider of lithium as well, which not only is, production of that element, but also, of course, then the supply chain opportunities there as well.
Thanks for that, Alison. Angela, Rachel, or John, I think, John, you had wanted to jump in to answer this as well. I'm curious what your thoughts are. And I think you're muted. You're muted still. There you go. It's the phrase of 2020 and 2021. There we go.
My apology. Sorry. I think, what makes real is you want to make something the world need, right? Especially O1, especially in that real, if the net zero world comes about. So let's look at that scenario of net zero. Many would assume, no oil will be needed in a net zero world, but that is not the case, right? If you can look at all the analysis of BP, IEA, there is still over 20 million barrels a day oil will be needed the world in the net zero world, right? So I will make the case in that world. Actually, the world will beg Alberta to produce more bitumen. This is certainly outrageous, but let's look at this. In a net zero world again, you have about 24 million barrels a day of oil is needed, and the world need also 220 million tons of asphalt. That means you have roughly 3.8 million barrels a day of asphalt is required, and no other oil actually can meet that demand except Alberta's bitumen. We only needed to produce 7.6 million barrels a day of bitumen actually to meet that demand. So of course, this is not going to happen on itself. We have to work very hard, but there are scenarios there where actually Alberta is actually indeed can position to do well in that net zero world.
Thanks very much, John. Rachel, can you tell us a little bit about where are clean tech companies active, and where are they showing signs of success now?
Yeah, so as part of a report that we're working on, we've been developing a database of clean technology investment trends in Canada. And so for this talk, I pulled out the Alberta companies to see what was happening within Alberta. And the database includes over 100 companies headquartered in Alberta that are active in areas such as low carbon electricity, batteries and energy storage, biofuels and bioproducts, agriculture technology, carbon capture, oil and gas emission reductions, and alternative sources of minerals and metals. So there's actually a fair amount of diversity in Alberta clean tech. And there are some really interesting early stage technologies being developed. For example, a company named Solar Steam that's developing concentrated solar technology for industrial process heat. And there's a company extracting valuable metals from electronic waste. There are a number of technologies that have high potential to scale and develop export channels. But one of the other things that I noticed in the database is that investment trends in Alberta companies, it's pretty flat. And the investment that is happening is mainly coming from public organizations like Sustainable Development Technologies Canada. There is an ag tech venture capital funder in Alberta, and a couple of companies have secured some major private investment, but it's really not as active as what we're seeing elsewhere in Canada. So not all the deals are made public, so it may be that this database is missing some of the things that are happening, but from what we see, it seems like there's a real need for more private investment to grow and scale these opportunities. So overall, I would say that Alberta doesn't seem to have a problem generating innovative ideas with lots of growth potential, but this lack of private financing could mean that there's missed opportunities.
Fantastic, thanks. So it sounds like we have the potential, we have the ideas. As Alison, you were describing, we have a lot of the resources, especially in terms of human capital, to push this forward. John, you're talking about some of the demand that exists there, but it is taking time. There are certain things that we also don't have. We don't necessarily always have the infrastructure. We don't always necessarily have the social agreement. We don't always necessarily have the policy certainty and all those other things that are impacting investment. So are we moving fast enough right now? Is our current trajectory going to put us as winners on the podium here, or are we going to get our lunch eaten by competitors? And what might we need to do to change that? So I don't know, Alison, do you want to take a stab at that one, or anyone
Sure,
else?
why don't I start? Yeah, I'll share a couple things. And I think the short answer to that is not yet. I don't think we're moving fast enough yet. I think what Rachel was sharing, I think definitely resonates with some of the experiences we're seeing with innovators on the ground. Is there's this pretty big race to be second, which is one of the problems we currently face, where innovators tend to have to leave the province in order to find their first private investor or their first pilot, often as well. Not always, of course, but there is certainly a trend that we see on the ground there. And then from a policy certainty perspective, I think there's a lot we can do here at the provincial level. And I think it starts with, we can't assume that the net zero commitments we're seeing from the corporate sector are enough. We need a provincial commitment that is backstopped with the milestones that have been spoken to earlier, compliance and reporting as a baseline to signal the levels of alignment with the where people are headed nationally and internationally. And I think that's a really important one. Of course, strong performance on other broader ESG metrics also extremely important. And I do think, Marla, you mentioned infrastructure. I think there's an important role there for government support of the specialized infrastructure that's needed for in some of these technical pathways. For example, hydrogen pipelines might be an example there. And then clarity on how these would integrate into the existing infrastructure as well. And then, of course, transition finance taxonomy. I think that's under development with the CSA, which I think is going to be really important for attracting more private investment into the space. And I think Alberta can play a big role there in supporting that work and on the adoption and implementation side. I have another idea, but I feel like I've been talking well, so maybe I'll save it and work it in later.
Okay, sounds great, but I thought it was a great answer. And so I hear you definitely coming down on the side of, we're on a path, but we're not going fast enough, and the supports aren't all there. Other panelists, what do you think? John, you're unmuted.
Sorry, I muted again.
No, you're not. You unmuted yourself. So what would you like to say?
Yeah, so I certainly agree with Alison. The previous panel talked about 20 years to develop a SAGD, but in reality, actually took more than 25 years for SAGD to be commercial. And we started, BBC about 5 years ago. Pushing this, I don't think we'll have 25 years to make that happen, to make that commercial. So yes, we're making good progress, but I think it should be and it could be much faster.
Great, thank you.
I can jump in there too, Marla, if you'd like.
Rachel, please.
Yeah, I mean, one of the interesting questions for Alberta is where to place those bets and where that future, what that future looks like. And maybe there's a hedging strategy there too. I mean, a lot of talk about how to compete in the oil markets that are shrinking. But there's all these other markets that are going to be massively growing out there. And it seems that Alberta has the innovative potential to offer things to those markets. And it's not always energy. It could be technology, it could be services, it could be products that could be made in Alberta. So the question is determining where Alberta has that potential to compete globally on both a cost basis, an emissions intensity basis, and a product quality basis. And then what are the barriers that those companies that have those things in place are facing to reaching that scale to really be globally competitive? And then governments can help play a role in overcoming those barriers.
Rachel, where would you place the bets?
Well, in looking, I mean, one of the things that I have been doing is looking at where there are companies that are growing rapidly and where they're attracting investment. And so, I mean, people have mentioned geothermal. Alberta has some geothermal companies that look pretty promising in terms of where the investment activity is happening. And one of the ways to help grow those companies is growing the demand in Alberta to help them grow and scale and reduce their technology costs at home so they can really be global players internationally.
That's great. Angela, we're going to turn the spotlight on you for a few minutes here and your area of expertise, which is a lot of the people side of things, which is terribly important. And I wanted to talk about this. The phrase that came to mind when I was thinking about that bucket of things is the geography of opportunity. How well does the geography align for new opportunities versus where opportunities previously occurred? Is it the same places, or are there some communities that are going to be left behind? And to that, I also want to add a question that I see in the Q&As here about the gendered aspects of transition. This person noted that the current state tends to be more male dominated, and the future state possibilities have a greater presence of women, visible minorities, and youth. And what does that say? So what can we be expecting as we look to the future, and how that might be different in terms of geography and populations than what came before?
Thank you. That's a really important question, because I think, as Andrew noted in the previous panel, there is no silver bullet that's going to make the transition easier, right? This is going to be a difficult transition, and more difficult for some people than others. So there are going to be regional differences in what it looks like and what we are able to do to help people in some rural areas. So you've got people that maybe are working part-time in the oil industry and farming part-time. And if their oil industry job goes, now they have to move somewhere and they have to think about selling the farm. Or if they've got a house in Fort McMurray, now all of a sudden the value of that house is not what it was, or in Cold Lake, right? And we have a lot of experience doing this on a smaller scale. We have mining communities where, the government basically gave everybody the value of their home before the mine was closed, and to help people move away. Or we've bridged to retirement for people that can't transition, or where we can't build a new industry there. So it's going to be tough. tough for some people. And I think we have to be honest and recognize that there's no magic solution, but there are things that we can do to make it easier. There's apprenticeships where we can fund apprenticeship programs in areas where we see growing demand, like geothermal. That's something where we're developing it where it was. We're using skills that people already have, and we're taking advantage of our strengths. But there's going to be other areas where it's new, and this always happens. So we can build electric vehicles in southwestern Ontario. So that's going to be great for southwestern Ontario. And they struggled while Alberta boomed. So maybe overall that's kind of fair. But you're still going to need to think about those workers that are left behind that had really high wages. This was brought up in the report that the oil and gas industry might not be very labor intensive, but it's really high wage. And so when we're thinking about those jobs, those high quality, good jobs that are transitioning, and then all of the indirect jobs that rely on that industry, we have to kind of think a little more broadly about just transition.
So you mentioned here the things that can be done to help that just transition and to help workers transition into new roles. To what extent is this being done, and whose responsibility is this? And this may also play into a question that Robert Wild is asking about whether there are possibilities for community investment into a managed transition in some way.
So we had this previously with the transition off coal, and there was a Just Transition Act the federal government had, and workers were consulted, communities were consulted. There was a Just Transition Task Force, and they went around. There was money that was provided for communities to do regional economic development to try to help replace some of the income was lost. There were public forums that were held just to help people work through the reality of this situation, right? Because it's such a huge change. And you really need people to get out their anger because they're going to be angry. It's not fair, but it's happening, and it's going to be less painful if we can have those conversations, if we can make the strategic investments, if we can do the training that we need to do. So I think it's really important as part of a just transition to do this. Now, the federal government promised in 2019 to implement a just transition framework more broadly. They have not done that yet. In the federal budget, it was hardly even, the last federal budget was hardly even mentioned. Now, COVID has taken a lot of attention. So we do hope that there will be some more progress on that soon. The CCPA has put out a roadmap for what a just transition would look like. And they talk about, making sure that traditionally underrepresented people get spots in apprenticeship programs and get spots in training. And that when we're building new industries, we think about that representation. But that also that we think about rights. So we think about labor rights, we think about Indigenous rights, we think about communities' right to be involved and set the direction for their that. And so, making sure that everybody who's going to be affected by it is at the table and can be part of that discussion, I think is really important. Just to mention, the coal piece was really small. It was really targeted. It was kind of a test run. And I think we can look globally to what's happening in other countries. I do think that Canada is well behind the curve on this. Other countries are way ahead of us in terms of investment in clean tech, investment in renewable energy, and thinking about how to fund a just transition. I mean, Germany did this 20, 30 years ago. I don't even know, but we can learn from what they did. And think about
I was
how
going
to
to ask you, you mentioned some other countries are further ahead. You just mentioned Germany. Are there other ones that you think we should be looking to?
Absolutely. Denmark, New Zealand, Australia are all kind of grappling with this right now as well. And Denmark put in some very strategic investment. And alongside that government strategic investment, they had a workforce development plan. So if we are going to be looking for government to make markets either through regulation by setting a clear message that these are our timelines for phasing out, so that investors know they have to start moving, again, as Andrew said, we sometimes overestimate what government can do and how quickly they can do it. But the whole oil sands industry exists because of government and public investment. So we have to also, I think, be patient with what some of that diversification investment can do. I grew up in rural Saskatchewan in the 80s, and I basically grew up on the language of diversification. And it's hard. It's hard to do because governments don't operate on those timescales, but it's possible.
That's great. I wanted to return this to the idea of infrastructure, which is, it keeps coming up time and again. And I agree. I mean, the infrastructure we all know is going to be critical to the success of building up either new industries or new forms of industries that can respond to the energy transition. And one of the things that I've been thinking about comes out of the government's healthy environment, healthy economy strategy, which I've heard some people call the HE strategy. I don't know if that's broadly in use, whether that's a good way to call it or not, but in the HE strategy, one thing that was promised was a national infrastructure assessment where the government's really going to review what's in place. And I know that when we think about infrastructure that's needed to get companies up and going and to get the transition happening, the first thing that the mind might leap to are things like transmission lines or pipelines or bridges, physical pieces of infrastructure that we need. But I'm also thinking about the other types of things that we need to support that infrastructure. For example, a strong regulatory environment that is ready to be able to evaluate new things as they come in. So I'm curious to all of you, what are some of those elements that you think that the government really needs to be evaluating for our readiness in order to be able to build up and build out the infrastructure that we're going to need to support this? What should they be looking at beyond counting numbers of bridges and EV charging stations, et cetera? Does anyone want to grapple with that question? Allison,
I will take a first crack at it off the top of my head. I would say, so a couple things come to mind. One is our pipeline capacity, but from a hydrogen perspective, we need to look at the compatibility for hydrogen and or laying lines that are alongside. We have the Alberta Carbon Trunk Line, which of course is a huge asset at this point. It's only about 10 or 15% full, leading to very significant CCUS reservoirs. That are reservoirs that are very kind of world-class for storing CO2, and which of course is an important component of any hydrogen production from natural gas. From an electricity perspective, of course, we have pretty significant upgrades to do. As you know, we assume that as personal transport moves towards electrification, there's certainly significant upgrades that need to happen there. And then I think there's a big piece that certainly Angela was speaking a lot to around the human resource elements of this. And I saw in the chat box, someone had mentioned Iron and Earth, which I think is important and valuable to give them a shout out in a group of oil sands workers who are building skills to participate in the renewables economy as well, which I think is a great example of that transition oriented mindset of where it's not moving necessarily from one to the other, it's building skills to do both and to be able to participate in both. And then I think there's also some really interesting work happening around the inactive wells. And Nina mentioned earlier the levels of inactive wells. And there's some really interesting work towards repurposing some of those for clean energy uses. And I think I've been most excited about the Renuel project in Southern Alberta around Tabor that also integrates worker training into that. So it's installing solar on an old well site, utilizing the electrical infrastructure that was there, and then training workers, kind of a hands-on training program in that installation as well. Just as another example.
Fabulous. Thank you, Allison. Angela, Rachel, or John, do any of you want to comment on what sort of infrastructure adjacent things we need to be looking at, or the government should be examining in its assessment in order to make sure that we do have that robust environment and keeps us ready to go forward? Rachel, you're off mute. You take it away.
Yeah, I can jump in. I mean, I think it's about the barriers to what we want to happen. What are the barriers in place? And there's both supply side barriers and demand side barriers. And it seems like there's been a lot of focus on the supply side, but not probably enough on the demand as a driver of investment. And then that would require tackling some of those challenges in Alberta. If you want strong demand for hydrogen in Alberta, you're going to have to think about where that demand's going to come from and how you drive that demand. And that requires thinking about the policies needed to put that in place. So there's a lot of things you can do on the supply side to unlock, production and build the infrastructure out to help that happen. But without that demand there, the investment's going to go elsewhere.
So I'm going to dig to the side for a second on this one, because this actually segues really nicely into a question that we received around demand side and supply side management, that we've had a much stronger history of governments managing the supply side, but can we continue to dump responsibility for energy and economic transition into the laps of policymakers and supply side interests only? What's the role of demand side and of government and policy in creating demand side changes, as opposed to just muscling down on the supply side? John, do you want to have a first hack at this?
Well, I guess the climate policy is really to create demand, right? So this is probably the strongest demand if you look at the U.S. recovery package or around the world, actually major government. Those are all from the demand side, actually pushing. So I actually, totally agree with Rachel's comments. We needed to thinking about when we're building the infrastructure, we needed to thinking about what is the demand. We also needed to thinking about the scales. The Alberta, the oil industry is $100 billion industry. When we're talking about all of these, we needed to thinking about the scales, and a majority of that product is currently export. So if we want to make a huge difference to this industry, that's a scale we need to think about it. So.
Yeah, I think government can do a little bit on demand in terms of procurement. So they can start buying electric vehicles. They can start retrofitting public buildings. You could put solar panels or renewable energy at public sites. I think that though, to John's point, doesn't quite match the scale of the oil sands, but it does help to create some demand. And for fledgling industries, for example, geothermal, that might be something where government can help kind of create an initial market for companies to scale up. And so that might be something that's really useful to think about.
Super. I'd love to ask you guys about the evolving role of Indigenous groups with respect to energy, because increasingly we're seeing Indigenous groups. Historically, major energy projects took place really close to Indigenous communities or on traditional lands, but more and more now we're seeing Indigenous groups becoming active energy or active partners in energy projects, or sometimes the project owners themselves or the project developers themselves, sometimes for fossil fuel projects, sometimes for renewable or clean energy projects. What's the implication of this? How does this make this transition perhaps a little bit different than other types of transitions that we've seen before?
So it's Angela. I think the thing is that we're trying to do several transitions at the same time. And so that's complicating factors. So where there's a phrase that I'm sure you've all heard, land back, where 89% of the land in Canada belongs to the Crown, where the Crown is the province or the federal government. And Indigenous groups across Canada are saying, one of our issues is that our land was stolen from it and you continue to generate wealth from this land. We would like a return. The reserve system is only like 0.2% or 0.02% of the land in Canada. And that's where a lot of wealth is generated from. And so quite rightly, they say, if you gave us the resources that were ours in the first place, if you allowed us to manage and steward these are traditional homelands and allowed us to govern ourselves appropriately, then we would be able to generate wealth in our communities. And so I think this is a really important transition that's happening. The fact that it's happening at the same time that we're transitioning off oil and gas is complicated because especially the provincial government in Alberta, they're already losing a lot of resources. They're losing a lot of revenue from the decline in oil and gas. And so it's kind of coming at a bad time for the pocketbook there. But I think it's really important to acknowledge it. I think it's really important to, when we're implementing, say, geothermal projects, to partner with First Nations and to provide the training that they would need to manage and continue that type of clean energy. I just think it's really important. Oh, and I wanted to shout out Oil and Earth, or Iron and Earth, which was mentioned. There are other unions that are actively working on this as well. And Blue Green Canada and the Green Economy Network are two of them that are really working on having these conversations with workers and communities and working on that transition. So
fabulous. Thanks for the plug. We'll have to go look them up. Rachel, did you have something you wanted to add on this question?
Yeah, I think quite often when we talk about just transition, we're focused on oil and gas workers. But there are a lot of communities out there, and Indigenous communities in particular, that haven't particularly benefited from past economic growth. And so as we think about the future, there's an opportunity to include those communities in the growth opportunities. And I think nowhere is that more true than with Indigenous communities, and a chance for them to have equity stakes in projects, clean energy projects, and potentially mining, that generate wealth for their communities and help to improve their well-being. So, as we think about just transition, hopefully it's a broader concept than just oil and gas workers.
Yeah, I think that's extremely important, Rachel. It's just transition does tend to be often interpreted just as in relation to oil and gas workers as an example, whereas if we talk about an equitable transition, I think it's a much broader look at how the transition can also benefit those that haven't prospered from the current the industries that we find ourselves in today. And certainly something I'll just add there is there's certainly a growing recognition, at least amongst industry, that there aren't any big projects that don't include Indigenous partnership at this point. And I think that's a very significant shift, and part of the transition that you're speaking to, Marla, around transitions kind of layered upon transitions, and it's a really important one.
Well, I also want to recognize there are Aboriginal people are actually driving the transition as well, right? It's not just we're helping them; they're actually driving. One example is Wapaki Energy. They are very much at the leading edge of bitumen beyond combustion pursuit. The company is completely pivot to that, and I clearly want to recognize their leadership, right? So.
Thank you. I'm going to take moderator's privilege to insert my own comments in here as well, and just some thoughts, which is one of the things that I haven't heard talked about very much when we talk about the clean energy transition and opportunities, et cetera, has been the potential economic role of offset projects in Alberta. Offsets are something that I believe that the importance of these is just growing when we have more and more companies, more and more jurisdictions making net zero promises, and most of them can't get to absolute zero. So the need for offsets is only going to grow. And this is an area where I feel that having something that can help take the resources that we actually have in terms of so much land, so much expertise, et cetera, and turn this into offset projects isn't something that's being talked about as much yet. But the reason I bring it up now is I also see it as an interesting and natural marriage with the interests of many Indigenous groups who are concerned about stewardship to begin with. And how we turn that into an economic opportunity that benefits Indigenous groups specifically, as well as helping achieve those net zero objectives, is something that I would love to push. So keep an eye on Canada West Foundation. Hopefully we'll start getting our hooks into this one pretty soon. And this leads to another question. This one also brought up by Robert Weil, but it's one that I often think about as well, which is when we think about the transition and the need for transition and what has to happen. so much of the focus is on net zero and emissions reduction, and not to make a pun out of it, but that kind of sucks the air out of the room. The problem in my mind, and again, this comes back from my own impact assessment background, is that there's a lot of other limited, really important resources like water, like biodiversity, that we absolutely need to make sure that we are not impacting at their expense in order to achieve the net zero goals, because it doesn't do us a whole lot of good to take one problem and just swap it out for another larger problem later. How much thought do you see going into preserving these other things and our environmental impacts on other medias, I would say, as we look to making a transition to what the future looks like? So there's a question and a half for you. Allison, I'll kick it over to you if I don't see anybody come off mute in a moment here.
Sure, I'll take a stab. Yeah, it's great question, Marla. It's really fair, because I think with the big focus that has grown around climate change and climate action across the globe, I do think that it's a fair assessment that that there's so much focus on it that there has been less attention paid to some of the other aspects. That said, I do think there's certainly a lot of groups that are looking at that more systems level view of the transition, and certainly not solely climate and emissions focused, but with that focus on climate, it can, I think it is fair to say that it can suck some air away from other issues, and we certainly can't forget about water and land and biodiversity and the whole spectrum. Yeah, I'd be interested to hear what other panelists have to say on that.
Yeah, I can jump in on that too, because one of the focuses that we have at the Institute on Clean Growth is taking that holistic perspective, thinking about how the structural change that we're talking about can work for both the economy, for people, and for nature and the environment as well. And often that part is not thought about enough as we think about pathways and ways to reduce emissions. There are some that are probably better when you look at all of the other aspects than one that's maybe purely least cost on an emissions perspective. So hopefully we start to think about the air pollution side, the biodiversity side, water use, all of those things as we think about the optimal pathways to reach net zero.
I would say, in this aspect, Alberta Innovates actually has a very balanced approach. We have a very strong water innovation program, which has been, invested tens of $millions of dollars. It's certainly one of the strongest program in the country. The water conservation, the water quality. We're also working with agricultural sector, working with energy sector, with COSIA, the water release. On the biodiversity side, we supported many strong project chairs, everything. So overall, I think we are taking a very balanced approach in this area.
I think a lot of this comes down to urban planning issues as well. So if you think about how we're designing our cities, and do we want to incentivize electric vehicle use, or do we want to incentivize more cycling infrastructure, more public transit infrastructure, more livable, walkable communities? I think that's really important. But I also think that if we have the opportunity to be investing in our future, if we want to think about what we want our economy and our society to look like, that we would invest in broad infrastructure where, like higher education. So Alberta has fantastic universities and really, really bright people. And if they have the opportunity, maybe they're going to do something that we couldn't possibly predict on this panel. But having an affordable education, having somewhere affordable to live, so like affordable housing is a big issue, right? If you can't live in Calgary or Edmonton, then you can't contribute to those economies. And that's a real problem. I think for us, we're losing talent when we make it unaffordable to live in our major cities. So all of those pieces, I think, come together. And when we think about infrastructure, we should think about affordable childcare. We should think about affordable housing. We should think about broadband. I know everybody says broadband, but like it's still not there. We still don't have access to high speed, quality, stable internet. And we should at this point in Canada's development. We don't have access to clean water in rural areas. Like this is a huge problem. That basic infrastructure absolutely has to be there if we're going to transition.
I think you should change the name of the think tank from the Broadbent Institute to the Broadband Institute and just advocate for that all the time. Just to wrap up, I'm going to ask you each to name one strength that you think Alberta can build on as we're transitioning to new growth opportunities, and what one big challenge is that we're going to have to overcome. So John, let's start with you.
Well, I guess you probably everyone is tired of me mention on BBC bitumen beyond combustion, but you know that's I think it's a great opportunity in terms of we do have the resource here, right? So this is the natural resource, but we also have the intellectual resources as well to make that happen. So great combination. I think, you know, we need to work hard at that. It's not going to happen on its own, but I think that is a great potential.
Fabulous. Rachel, can I pick on you to go next?
Sure. I'm actually going to say that the magnitude of transformation required in Alberta is an advantage. Because it's actually a huge investment opportunity. If people are looking, you know, where large scale investment could happen in Canada, I think Alberta is a pretty promising area for that. But the challenge, I think, is really that timing, potential timing mismatch. I mean, how soon do you start to move off of things that are currently paying the bills and financing some of those opportunities? And how quickly do you move into markets that are still kind of in their infancy and it's not clear how quickly they're going to scale? So, you know, there's that challenge of how to get the timing right and how to make sure that you're smoothing that transition instead of having sudden jumps and sudden declines.
That's great. Thanks. Angela, what do you think? What are your thoughts?
Well, as a labor economist, I think I'm going to say the people. So there are hardworking, talented, really innovative, creative people that live in Alberta, that love Alberta and that want it to be successful in the future. And so I think that it's going to be the people that are going to find a way to make this work.
Great. And perhaps not accidentally, Alison, the last word goes to you on this.
Well, thank you. That's very kind. I was actually going to say the people as well, but Angela said that so well. So what I'm going to share is honestly, the scale of the challenge, and just reference the fact, I mean, IISD has been brought up a couple of times. I think it's an important example because at the time, the scale of transformation, it was about transformation as opposed to disruptive innovation as opposed to incremental. And I think there's some important lessons in that. Dr. Sarah Hastings-Simons from the University of Calgary School of Public Policy has an excellent paper that draws the lessons and learning from IISD and sort of applies that thinking to, from an industrial policy perspective, where we need to go. I think it's an important piece to just looking it up. And I think, you know, it is about big bets. We have to make some, and we need to move. We need to do that. And I truly think that we can. And so I think there's a strength because of the people, and the challenge that we need to overcome in that is mindset. We need to move from defending our past to celebrating it and building upon it.
Fantastic. I really like that last phrase. And with that, I'm going to turn it back over to you, Aaron, to wrap up.
Thanks very much, Marla, and to the whole panel. It's been an extremely rich couple of sessions, and I'd be a fool if I tried to wrap it up with any kind of meaningful summary remarks, but nobody's ever accused me of being sensible before, so let me just offer a couple of thoughts to where we ended up. I mean, we heard strongly that the future is going to be different than the past. And it's going to be different from the perspective of investors. It's going to be different from the perspective of producers. And the the take-home message is that oil will not be, either in the run-up to post-peak or the downslide from post-peak, as big a contributor to prosperity in Alberta as it has been over the last couple of decades. And that drives a couple of meaningful policy prescriptions. One is that we need to start thinking about a transition away from that major growth driver. And the other is that we need to think about those alternative centers and growth poles that could drive future prosperity in Alberta. And we heard in the context of both of those, they are happening. So we have work on bitumen beyond combustion. We have a commitment to just transition in Canada, but neither is happening at the kind of pace and intensity that rises to the need that's presented by this looming transition. So then we get, as a natural place for me to get as a policy wonk, then we get into what policies can help accelerate those two necessary drives in terms of the drive toward diversification. What helps drive the market for the new products? What kinds of domestic policies can create those markets? What's our model of industrial policy? Whether it's in terms of providing the kinds of skills and education that are needed to power that drive in the future, or whether it's in terms of the basic infrastructure, including broadband and affordable living. What government procurement, what can help drive that diversification? In terms of the just transition, how can we make it, we heard it's not going to be rosy. There are very few examples of painless transitions, but there are examples of transitions which are better managed than others. So what kinds of policies can help us ensure that the transition is both managed well and inclusive, including those communities and individuals that haven't been traditionally beneficiaries of our current models of development. So if we bring all that together, we have a nice picture of the drivers that are propelling us toward a different future, and the clear need to act with greater urgency and compelling need for more policy attention in the areas that help get us there. I'm adding foolish conclusions to what was a really rich discussion, but that's what I take away from it. And believe me, I took away a lot, both in terms of the discussions in the panels and the discussion in the Q&A and the chat rooms. So I want to thank, on behalf of myself and IISD, but also on behalf of Jennifer and Marla, all the participants in the panels and the participants listening online for their contributions, and to assure you that this stuff matters, both in terms of starting to have the conversation, but in terms of driving the work plans of organizations like IISD, like Canada West, like the University of Calgary, to try to help ensure that this transition that we're facing is a successful one for Alberta and ultimately for the country. And you'll be hearing more from all of us on this as the conversation continues. With that, thank you all, and we will talk to you later. A final word: this presentation, this webinar has been recorded, so you'll see from a follow-up link where you can go back and peruse these rich discussions at greater leisure. Thanks again. Cheers to all.